This is The Real Story with Michelle Makori.
The most important signal in global finance right now is coming from central banks. Their gold buying is hitting historic highs. Now that's the headline, but what's behind the headline is the real story here. So we know that central banks have been the real force behind this gold market. Since 2022, they've added well over 2,000 tons of gold to their reserves. That is the strongest multi-year accumulation in modern history. Central banks now hold more gold than U.S. Treasuries across global reserve portfolios for the first time since 1996. And we know the official sector has been the anchor of gold demand. We know that the smartest buyers in the world have been shifting out of paper assets and into physical metal. But now there's something even more revealing. It turns out that central banks do not want us to know just how much gold they're actually buying. They are buying covertly. They're buying secretly. They're buying gold off the record. According to the latest World Gold Council data, central banks purchased 220 tons in the third quarter alone. But only 1/3 of that shows up in public reporting. The remaining 2/3 are invisible. They do not appear in IMF disclosures. They do not appear in National Reserve updates. They're hidden. 66% of central bank gold purchases are unreported. Now, this is not a clerical issue. This is a choice. Central banks are accumulating gold at record levels, and most of that buying is happening off the books. So the question becomes why? Why would the most sophisticated financial institutions in the world buy aggressively at record high prices and then keep most of it off the record? Why keep the scale of accumulation so quiet? What are they preparing for? Well, before we get into that, how do we know that they're actually hiding their purchases? Well, here's how we can determine that the reporting is incomplete. The World Gold Council compares two sets of numbers. They measure the physical flows of gold around the world, and then they compare that with the official central bank disclosures submitted to the IMF, the International Monetary Fund. Now, those numbers should match, but they do not. So the Council measures the global physical movement of gold. That's the first step here. And that comes from hard data sources: international trade flows, import and export declarations, refinery output, vault inventory movements, LBMA and COMEX clearing, bullion bank reporting, dealer deliveries and withdrawals. All of this is physical metal. It leaves a footprint. Then they measure demand from all of the visible demand categories: jewelry, technology, retail bar and coin buying, ETF flows, future markets, OTC trades. These flows are transparent and they're tracked in real time. And then they isolate the gap. They look at the difference, because when you line up the physical flows with the visible demand, a huge portion of the gold leaving the market has no visible buyer. When the Council accounts for jewelry, retail, ETF, futures, and industry, there is still a massive amount of gold that must be going somewhere. And the only logical destination is central banks, because no other category of buyer can absorb hundreds of tons of metal surreptitiously. And in Q3 of this year, that gap was enormous. The total central bank demand was estimated at 220 tons. But the official reporting only accounted for 1/3 of that global physical gold tracked. The remaining 66% has no public disclosure source. No one is claiming it. Then the Council confirms this by cross-checking with IMF data. Central banks are required to report reserve changes to the IMF. Those numbers do not match the physical flows. The physical market shows far more gold being absorbed than the IMF data reveals. And the pattern is now consistent. Since 2022, the hidden portion of central bank gold buying has been rising. So this is not a one-off anomaly. This is a structural change in behavior. The World Gold Council explicitly states that hidden buying has increasingly become the norm. So the countries that do actually report are not the ones buying the bulk of the hidden tonnage. Most of the unreported buying comes from countries that choose not to disclose, often for strategic or geopolitical reasons. And the pattern shows us now that 2 out of every 3 tons of gold that central banks buy is kept off the record. But even with all of the secrecy, there are still some things that we do know from the official report. We know that Kazakhstan was the largest visible buyer in the third quarter, adding 18 tons. Brazil returned to the market for the first time since 2021, adding 15 tons. Turkey added more gold. Guatemala nearly doubled its reserves. And we saw purchases from Iraq, the Czech Republic, Ghana, Azerbaijan, Bulgaria, Indonesia, the Philippines, Kazakhstan, and Serbia. And year to date, Poland remains the biggest disclosed buyer. The National Bank of Poland now holds more than 500 tons of gold and has raised its gold target to 30% of total reserves, signaling it has no intention of stopping. In fact, the head of Poland's central bank says, in these difficult times of global turmoil and the search for a new financial order, gold is the only safe investment for state reserves. Well, as for China, the People's Bank of China officially reported adding 5 tons in the third quarter. And when it comes to tracking global gold flows, analysts say that China is the biggest black box of them all. China says it has 2,304.5 tons of gold reserves. Now, based on that number, it's not even in the top 5 holders. US, Germany, Italy, France, and Russia are the top official 5 gold holders in the world. But we know that China is underreporting. In fact, it's estimated that the real number could be 10 times that, putting China squarely at the top of the list as the world's biggest gold holder. So why would central banks want to hide their buying in the first place? Well, there are some obvious explanations. If they disclose large purchases, they drive the price higher, and they make it more expensive to keep accumulating. Quiet accumulation also helps them avoid political pressure. It allows them to hedge or prepare for sanctions risk, geopolitical tension. As we know, gold is the only asset with no counterparty risk. It cannot be frozen, it cannot be cancelled, it cannot be devalued by another country's policies. So openly adding major amounts of gold would expose their long-term monetary strategy and raise questions that some of these countries do not want to answer. It also raises questions about their confidence in the dollar and in the global system. So when the smartest, most powerful central banks in the world are not only buying gold at record levels, but are also hiding their gold purchases at the scale, well, it should make everyone ask what it is that they see coming. What are they preparing for? It's a signal that something fundamental is shifting in the global financial system, and gold is at the center of it all. And that's the real story.
This is The Real Story with Michelle Makori.